Hey, it's Dr. Jeffrey Scott. This is part two of my weekend market update. Doing this live here in Barcelona, Spain, where I'm at the World Lung Cancer meeting, presenting a couple of papers in my other life, which is healthcare, entrepreneurial business, and research. This week, I talked about the weak employment data driving bonds higher, yields lower, help the market until the end of the day, perhaps on Friday when the market gave back some. And will high inflation data this week ruin the impending rate cut party? Again, this is going to be my stock update, although I'll do a brief review of the markets. My name is Jeffrey Scott. I am the marketmripro at gmail.com, and my Google group is Top Down Trader. As always, these are for educational purposes only. Any recommendations I make should be taken in the spirit of education and not investment advice. The intent of the video is to show you how to use my tool for top-down analysis. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools in many different platforms, and the next one to be released will be MetaStock. If you're looking for the wealth charts video, I still do those. I do them weekly. Typically post them Monday morning, and I'll be doing that later on today. My Palm Beach Gardens live meeting is October 26th and 27th. Marriott Palm Beach Gardens, 2 packed days of education, software instruction, and networking opportunities. 1250 includes all the food that you'll need on Sunday and Monday. Certainly breakfast and lunch, dinner on Sunday, breakfast and lunch on Monday, and lots of snacks. And we'll do a dinner cruise on Stocks and Docks on Sunday Eve, weather permitting. Again, it's a full service Marriott, 155 a night. To get that rate and register, just email me at marketmripro at gmail.com and I'll send you the links. Couple of other things. It's back to back with John Person seminar, October 24th, 25th, separate fee, but one airline. Fly in, go to his meeting, come to my meeting, fly home. If you come to my meeting, specifically my meeting, you'll get a $400 rebate on your tuition. You can use it for next year's class. You could use it for the software program if you want to buy it. If you don't have it, you could use it for any of my other tools. And my Google group is called Top Down Trader. How do you join a Google group? You go to Google Groups, click all groups, find the one you want, join it, tell us how you want to be notified. If you can't tell, I do these unscripted, unprepared, unedited. I just give you my train of thoughts at a given point in time. News and earnings this week is all about inflation. Wednesday and Thursday, CPI, PPI. The consumer sentiment can sink a ship if it comes in weak. And I guess credit and optimism matter as well. But to me, it's about inflation. And then we have the jobless claims. If you look at earnings this week, we're slowing down as we end this cycle and get ready for the next cycle. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information, to order Market MRI Pro, for information about anything I discuss, or register for the meeting, leave remarks. If it's comments about the program in the YouTube remarks section, you can email me at marketmripro at gmail.com. And if you're a Market MRI Pro customer and need any support, coding at marketmripro.com, and consider joining the Google group. One other thing to add, I don't charge for these. I probably never will. I don't believe in that. I think videos are a great tool to disseminate knowledge, and you shouldn't have to pay for all your knowledge that you get. Um, Live meetings have costs, but you can support me without paying for anything. Why don't you click the thumbs up if you like these videos? If you're new to my channel, subscribe, hit the alarms, when I do those, and to the charts. And just like to show you that this is not the hotel we're staying at. We could, but it'd be a lot more money. However, if you bring your loved ones and you want them to love you back, this is the Marriott Singer Island. I used to live 2 doors down on Singer Island and awesome beach. And you could certainly drop them off there or leave them there and come to the meeting and back and forth. It's not very far, maybe one turn, and they'll love you back. All right. All right, all right, all right. So let's make sure I retitled this. Okay, nope. Just don't, let's cancel that and save it. Sorry about that. I should have saved it already before. I just need to change. say this too. Right. So now let's take a look at, I don't know why this keeps popping up. Close that down. Here is Market MRI Pro. And let's go right to very quickly. This is not a teaching how to use the program moments. This is going to quickly tell you what I think about the market. To the upside, Bitcoin led in the equities. The only thing that was positive on Friday was Russell and the Qs. Spiders and diamonds down just a bit. Everything finishing about the midline except for the dollar, which was a higher part of the day, but it was down significantly. Over 5 days, you get a picture that shows you that Russell led, VIX was up, and dollar was up on the week. Everything else was down, but to say down modestly would be an understatement. If we look at the new high, new lows, new highs, net new high, new lows, 138 on the NYSE, 99 on the NASDAQ, essentially triple digits on both improving. That's good for the market. If we look at participation, you could see only 56% of the stocks were up on Friday, S&P 1500, 52 on the NASDAQ, 57 on the NYSE. I call those 50-50 days. It means that the average stock was probably relatively neutral. It wasn't a strong day. It was not a weak day from a breadth perspective. I look over here to see what's leading. This is S&P 500 ETFs, and you can see one day real estate, materials, communications, healthcare, staples, and tech were the only ones that were up, leading to the downside energy, financials, and industrials. The thing that surprised me the most on my review of 1,000 stocks over the last 12, 18 hours was how bad financials sold off. And I guess the rates and slowing economy potentially really spooked them. But boy, did financials take it on the chin. I like to look at what theme was working: lithium, solar, clean tech, cannabis, mining, gold, biotech, social media, home construction, biotech, and silver miners. Then I do a quick review just to talk about my timing model. Shows sell signals still in the spider and the Qs, buy signals in the Russell and diamond. So to me, that is sort of a soft be concerned, not a hard be concerned, especially since they're both above the WMA. And the more important weekly timing model, where I put a lot more of my consideration, has been and remains positive. You can see that the green bars across all four. So the weekly model is positive, and not that we really watch the monthly, but it's positive. So long-term trend is still up. Very short-term trend says to be careful, and that fits a market that potentially chops around a bit. And that's the question. Do we go high to higher highs immediately? Certainly possible. Do we chop around here? Or do we break down? And I think with impending rate cuts, the risk of a big breakdown here certainly is a lot less. But my guess is we probably follow the chop scenario, but we'll see. I'll trade what we get, not what I think we'll have. If we look at the US index ETFs, and I'm not going to broaden them up because we've already done this, you could see across the board, we set a new high on Friday on the spiders, finished down 0.29%. We finished new high on Friday, or almost just off the highs on the NASDAQ, finished up 0.14, but solid candles in my program mean to close lower than you opened. And then similar on the diamonds, set probably what looks like a new high during the day and closed down 0.45. The one thing that did not have a big reversal but gave us a doji was the Russell, closing at a recent high but not an all-time high. Volatility, if we look at the VIX, continues to sell off, and the VIX on Friday, it's hard to see that because it's so far down there. So let's just take a look here. Was down 0.78. It tried to go up earlier in the week and it failed at the 200. Good for the bulls. And then the dollar is struggling to get above this line here and actually sold off a bit this week, down 0.5% on Friday. Though on the week it was flat, the Friday was the sell-off. Commodities, I've been a gold bug for weeks. Talked about buying this breakout here. I did. And Usually I buy gold stocks. I actually bought GLD and it's been a nice move. There's a lot of talk about market forces could drive this higher. Both gold and silver had a good week. Gold closing just off the highs. Silver looking like the index is still up, but closing lower than it opened. Oil struggling as it's been to get above the 200. Natural gas not doing much. And then probably the big driver of the markets on Friday, look at the drop in both the 5-year, 10-year rather than the 30, 2.25%, 2.09% down as we were moved further away from that concerning 5% level. If we look at some of my breadth tools, the buckets don't give me a signal. Market breadth does not show me any new signals here. You could see that despite the negative day in the market, new high, new lows, AD lines, and up down volume were positive. And you could see that the NYSE's given us a doji bar, traded higher to set new highs, and came down and closed in the middle right off the prior day's close. And that we had on the NASDAQ composite a new high and then a intraday reversal. Make sure these are still daily charts. Yep. If we look at my bigger market breadth tool, and again, this is something that I created. I've asked Praveen to share it, but it's easy to create. It just, here's a spider, the NASDAQ composite, the Russell, and the S&P 1500. And I put a new high, new low, 13-week, stocks above or below moving averages, an AD line, and RSI. And you could see on these daily charts that we are near all-time highs on everything except for the Russell. And you can see that we've come off the overboughtness by the 13-week new high, new low on the spider and the NASDAQ composite, but we're still close on the S&P 1500 and the Russell. So those may be subjected to a little bit of a pullback that they haven't seen yet, uh, but they're not above 95 yet. If I go into stocks, and that's what today is about, I had positive and negative feedback when I went through a lot of stocks. So I've got a limited list here, but I want to show you some things that I've done to the program. I being Praveen and I. I'm a big believer in moving averages. And one of the things I like to watch on YouTube is Mike Webster's ranting and ravings. The guy's brilliant. He's been trading for a long time. And he talked this week about moving averages. And Ian Woodward, my probably my biggest mentor, used to talk about free parking, which was pulled back to the 50s. And for years, all I did was buy stocks that pulled back to the 50-day moving average and moved up off of the 50 with momentum. So the JAS list, impulse list, has 3,700 stocks, and we've added a few things. So let's look at stocks that crossed up above the 50. They have 5 and 500,000 shares. They're above the 200 and they're in a weekly trend up. Hit OK, and that brings it down to 4 scans going on at the same time. And being in hotel internet has not been the helper. 25 stocks. So let's just look at these very quickly and see if they meet the pattern. Sitting on the 50, hasn't had a momentum move yet. ADCO coming up through the 50. AHCO moving up off the 50. Lots of momentum. I just don't like the 50 below the 200, but it did take out the 200. BioNTech, big gap up. Look at the momentum there, relative strength in OBV. I just don't love the name, but that's just a personal thing. Core Natural Resources taking out the 50 with momentum. CNXC down in the pattern. Here's one of my favorite stocks of the week. So this was one of the ones I wanted to highlight. This is CSTM. It is in the mining and construction business. I believe they sell a lot of supplies. Let's open up their fundamentals. When you click, it stays there. And you can see their earnings are, well, they had a big positive earnings change in April, stubbed their toe in July, and they look like they're going to have 37 cents in October versus 2 cents. So that is a massive growth. Don't have revenue, but you can see they've been growing the revenue. They have a multiple less than 10. I think CSTM looks really attractive. If I was to trade CSTM, the way that I like to buy is I like to buy high to go higher. So there's different philosophies, but I would not buy the stock until it took out the high of the session. Now, the high of the session was 1462. So I might put a buy stop at 1465. That's close enough. Where am I going to put my sell stop? And is the stock, is there a place that makes sense? Well, I typically will put it at the low of the last four bars, but I don't like that stop because that stop is at 1361. So I'm risking about $1 on a $14 stock. That's about 8%. But the whole reason why I'm buying the stock is because it cleared the 50. So why don't I just put my stop maybe right below this level, 1397? That way I'm risking only about 67, 65 minus 95, 70 cents. I'm risking 5%. So if I was to take this trade, I would use these parameters, whereas I would look at somewhere up here as my first target. And when that happens, I might consider taking a little bit off, but I would move my stop to break even. That's how I manage the trade. This is not investment advice. It's showing you how I like to do it. Now, I know plenty of good traders that don't do that. I know someone that wants to wait till it pulls back here and then buy it cheaper to go higher. That's nothing wrong with that. I like to get filled. So this is one that I like. I can get a stop within 5%. That makes sense to me. I like that a lot. And again, what is it that I like about this trade? Uptrend, pull back to the 50 and a breakout. I look down here, I got momentum. I had the breakout bar yesterday. Don't have volume, which is too bad. And then I've got a CPR signal. So that's one that I'm interested in. SD Lauder, again, not a bad looking chart. Uptrend pullback to the 50. I'd like to see more momentum. Fox Factory, I think they do a lot of the Apple construction. Pull back to the 50. So again, I don't need to go through all these. Guidewire had a big move. Falcon Pharmaceuticals looked okay. Clack looks interesting, but it's an expensive stock. Um, Mobo was one that broke above. So that's one of my scans. Rubric is one I've been looking at, and it's sort of going sideways in a channel. And TSM is another stock I liked a lot. So this is the second one of my favorite stocks. So Taiwan Semiconductor, someone's got to make Micron's chips and AMD's chips for them. Look at the nice steady earnings. Look at the earnings growth. We're going to see 256 versus $1.94. That's among a little bit over 60 cents on a, that's a still 30, 40% growth, and that's without a surprise. It's got surprises typically. Um, you can see revenue growth. It's hard to believe that you had a minus 96% surprise when you had 56% growth. And you can see multiple 23, much more than the earnings per share growth. So Taiwan Semiconductor is another one I like. And if I clicked on this, you could see um, some nice news. And if you had um, interest in that, pick it up. Here's Motley Fool, and it's looking at Taiwan Semiconductor. You can read the story. So if my goal was to find stocks that were breaking above the 50, that would be great. Now, how about if we find stocks maybe that were pulling down, not going up? I don't know if we'll see any, but let's see. 50 at support. Nope, we didn't get any. Most of the ones that we looked at, because the market's been recovering from a recent pullback, were breaking through. But there is a way to actually look at stocks pulling back into support. That's one of the new things we added. So we added, what's that, 200-day support. Yeah, stocks that I probably don't want to be chasing because they're all the way down here, but stocks that are sitting on or close. I think we set the filter at 2% away from the 200 or less. These are stocks that have typically not done great if you're sitting on the 200-day or near the 200-day average. All right. Other thing that we added this time, to clear all my filters, was a new trading system that we'll talk about on one of the closed sessions. So the other thing I wanted to show you would be my favorite scan, which is 2 days Momo up, price and volume. Let's keep it above the 200, and I want an uptrend so the weekly bond goes up. And we're left with a small group, CRYX, beautiful uptrend, kind of loosey-goosey, but boy, breaking out here. Look at the weekly chart, give you a better sense of where it's come from. So it's been one that sold off like biotech sold off. It's got double momentum signal, breakout, volume, CPR. It's one of, I, I don't know what it does. When I first saw it, I thought it was a healthcare stock, but Cryoport breaking out. ERJ, which is Embraer, they make jets, and they released a new type of a jet recently. It must be getting some interest because beautiful breaking out here. Your two momentum signals, look at relative strength up, OBV up. And when you look at fundamentals, you see they're projecting 66 cents versus $1.20. That doesn't make a whole lot of love in my tummy, seeing smaller growth, but they've had some nice earnings surprises of late, probably a story about their new plane. EXP, I believe, is in, yeah, materials. Nice uptrend, move off the 50, taking out the 200 on good volume. Um, you have double momentum, breakout and volume. Make sure earnings are to November, 433 going to come in versus 427, not much growth. And you could see earnings are relatively flat. Revenue bounces around a lot. Don't love the fundamentals. That's probably why it's been beaten up. Can't argue with the fact that it had a nice move and took out the 200. And again, you could check the news and see what's going on. These new triangle or whatever those are called. Um, Diamonds are a new trading signal I have, which we're not talking about today. One of the things that I saw when I looked at all the stocks was not just housing, but housing related stocks were up as well, or remodeling. Floor and decor, it's probably in the same world as Home Depot. In case you're unaware, Home Depot um, had a breakout on earnings. Um, Again, it's really what the street expected, and the street really liked their numbers, and Home Depot had a nice move up. It has pulled companies like FND, which gave us the double momentum signal. We'll go back to that. Yeah. I'm in Europe, slow hotel internet, so not as crisp as it always is. You can see breaking through the 200 like Cryoport, volume, double momentum volume breakout volume gap, good volume. You can see relative strength in OBV. Again, low in its pattern, more bottom fishing than I normally do. 47 will be against 48 flat earnings. Revenue kind of flat. But I think with the home building industry picking up, that's driving that. Fulcrum Therapeutics is to me an unknown biotech, but biotech has been hot. Uptrend, sideways movement, pullback, and a breakout above the 50. I love the pattern. Don't know anything fundamentally about the stock. Double momentum and volume, relative strength and OBV look good. Here's another of my top 5 picks. Grab. Grab is Uber in Southeast Asia. When I went to Vietnam, I had to upload their app because they don't have Uber. They have Grab. Same thing when I was in Singapore recently, Bangkok, and other places in Southeast Asia. Grab is a cheap stock. It's been going sideways. Let's look at a weekly. It's pulled back. Question is something different this time? They're like Uber, they do food delivery and other things as well. And that is an hourly. We don't need that. So pull back, took out the 50, got 200 below. I kind of like this thing here. I like the pattern, double momentum, double breakout, double volume, relative strength and OBV look good. Fourth one on my favorite stock. So we had Taiwan Semiconductor. Grab, CSTM, and now Micron. Now, Micron, I took a position back here on this breakout, and it really didn't do much until Friday when, after sitting on the 50 with a breakout and momentum signal on Thursday, it got another momentum on Friday. Volume came in, relative strength and OBV looked good, not extended. This has got to be one of my favorite looking ones. And again, if I was to trade this, my style of trading, again, education here, not investment advice, be a little bit above the high. The lowest I need to put my stop would be the lowest of the last four would be here, and that is way too far. That's 15%. And I'd start looking at what makes sense. I'd probably consider 117, so it's closer to a 10% stop, which is still way too much for me. So I might have to go midway up this bar, which is kind of where the highs of these 2 days were. I'd probably put a stop there. And because of the type of stock this is, I'd like to see it 2 times that. So get me up to 20. So I'd probably put my first target in that range. And why do I do that? Because I like to take some profits and I want to raise my stop to break even. But again, that's for the live meeting to talk about how I trade stocks and how I would manage positions and how I've done what I've done in the markets. More than just stock picking. So Micron is another one. NAMS, New Amsterdam Pharma. Love the stock chart. Don't know anything about it. Let's pull here. So it doesn't make money. It has minimal revenue. So it's probably a preclinical company. Pull this up here. See if there's any news. Is it just a production? No key Alzheimer's treatment. So I read the news and decide if there's anything there that I like. It's certainly not being bought on fundamentals. It doesn't pay a dividend, but I love the channelingstocks.com breakout. Another home related name, although it's not going to be in my top five, is Pool. And Pool does pool supplies and pools. I live in Florida. Everybody has a pool. It's down in its pattern pretty far. It just took out the 50 weekly and the 200 daily. It did have double momentum volume breakout. Relative strength looks good. OBV's lagging. Okay, just not my favorite. STKL, they make sun optic chips. Kind of sideways. Maybe it's breaking out here. I'd like to see it clear this because right now it looks like it's in a trading range. And then another housing related stock, Trex. They make the fake wood for our decks and things, breaking out after a bit of a pullback. Wasn't my favorite, and you can see that OBV has not moved above. So we've talked about Micron, we've talked about Taiwan, we've talked about Grab and CSTM, and not on this specific list, but the other one of my favorites is Gilead. And why? Gilead is a quality name. I like to say that they're the company that almost single handedly, I won't say cured AIDS, but took AIDS off the big killer list and out of the front page of the paper and out of the obituaries. I don't think they get enough respect for that. And then they also made a great acquisition of a company called Pharmaset and took away hepatitis C as well. Great company. Stock has been struggling. It's pulled back and broke out above the 50. I like it here. If I look at the weekly, we're in a nice uptrend. You kind of got a cup and maybe a handle. And now we're looking for the breakout. 215 is going to come in against 202, so not a lot of growth. It'll be up to the surprise button to see if Wall Street likes it. Um, the weekly bongo or daily bongo is red because it's pulling back. This is one that I'll be watching as well. So we hit most of the ones I like. I guess one more, just I think this is a controversial company and it's an IPO. Imagine if you could take a blood test and do it every year, every couple of years, non-invasive blood test, and it would show whether or not you're harboring a hidden cancer. And that would enable you to get that cancer diagnosed earlier when it was very curative. Wouldn't you want that test? Sounds good, but here's the controversy. If I am your physician and I get referred you from another physician, if I was still in practice, who was say, an internist who did this test, and it said you got circulating adenocarcinoma cells. Well, where do they come from? I don't know. So that means I'm going to have to do CT chest and abdomen. I'm going to have to do biopsies of any spots that I see. And they're right. I might find something when it's very curable. What we don't know is if you have a better chance of long-term survival having this test or not. So it is boutique, probably becomes mainstream. Conceptually, it's a great story, just like the whole body scans, which people are paying out of their pocket for, which have not shown to improve survival either. But if you can afford them, there is a sense of ease of mind. So why did I like it? You pull back to the 50 for the first time and moving up, or second time. I think that you're buying it here at a low risk point. And I do think it's an interesting concept. And it really wouldn't surprise me if it doesn't become a mainstream test. So that's a weekly. Sorry about that. I hate when I do that. It looks even better here on the daily. And on the daily, let me take that one off, put a different one on. On the daily, what I see is that it's got double momentum, breakout, and volume. And why isn't it on this list? Praveen, why didn't this make the list? And there you have it. That is my stock review. Again, just to review Gilead, Grail, Micron, Taiwan Semiconductor, Grab, and CSTM. There's some nuggets there. Hope you have an awesome week trading. I may or may not do something Monday night after the market because of the time frame difference. The market won't close until 10 o'clock, and I'm flying back home Tuesday morning, so good chance I'll be sleeping. So have an awesome, awesome rest of the weekend. Hope you like the new format. Give me comments, and go make some money.